You say that China are potentially in a middle income trap.
Yeah, because their companies are not productive. They are not earning rates of return over the cost of capital, so they're not creating an atmosphere of growth in which their own people can flourish. If you're a graduate from a Chinese university, you have nowhere to go because their publicly traded corporate sector is just not. It's failing, and they're just locked in this stagnation, no growth, no productivity, and investors have no control, no power to turn it around.
But they're building and building and building. It looks like successful.
Yes, but if you build buildings that are not occupied, that nobody can afford or pay, and then you have to knock them down before anyone moves in. These statistics are all reflected in their GDP growth. But as I argue in chapter 12 of my book, GDP growth is often a mirage. It doesn't reflect, the amount of wealth, which is to me the important measure, the amount of social wealth being created. In fact, one comparison that I published, there was a book by a guy named Mike Beckley. It's called Unrivaled. It's got this American jingoistic title that we all can cringe at. But he said there's been zero productivity growth since 2008 in China, whereas the United States, 30% of GDP growth is actually increases in productivity. And that's reflected in the market caps of the companies. Chinese rates of return for equity investors have been negative since 1993 when the modern markets opened. So if you were an ordinary citizen trying to buy a Chinese publicly traded stock, you would have earned a -5% over that entire period. So Chinese savers do not put their money in the stock market. They put it in their local banks. Yeah. And their local banks are all state-owned, and they have required investment in local Social Security, local consumption, local health care, and they're not expected to turn a profit because they understand that their debts are going to be perpetually rolled over. So this whole notion that China has this vast hoard of wealth, the trade surplus, it's an illusion that they just, yes, they can buy government debt because they have nowhere else to put it. Far from being a sign of, this is the mercantilist fallacy, the idea that you accumulate all the gold in the world, you're somehow richer than everybody else. Well, China does have this massive amount of capital, which they then are forced to invest in American securities because that's the best option they have. Everything else inside their borders is not productive. They have a productive private export sector, which is where all the wealth has come from. But even these people, when they take their wealth, they don't invest in their own stock market because it's a fraud. They invest it in their banks.
In what way is their stock market a fraud?
It's manipulated by the Chinese government. If they think it's too low, they will buy stocks. The companies themselves are not profitable. And as I said, the long run rates of return have been negative. So
you mentioned the IPO thing as well, whereby
the IPO scheme is one of the strangest things I have ever seen. It's like they say, okay, we are going to float this company. We're going to underprice it by a factor of 100 to 150%. And any of you lucky enough to win in this lottery, if you know somebody in the party, you will get a lot of money, and they all sell on the first day.
Yeah.
So it's
and I bet it's not a lottery either. It's,
it is the most rigged process.
Yeah.
And my friend Carl Walter, he's the guy whose chapter this is about. I met him in Hong Kong at a conference. And the guy knows more about China than anyone alive. He's been in Beijing for 20 years of his life. He underwrote the first IPO with J.P. Morgan Chase. And he says these IPOs I just don't understand what they're for. It's a massive giveaway of the capital of the companies issuing the stock, and the state doesn't benefit because these companies don't end up prospering. Nobody wins.
It's patronage. It's a caricature of American capitalism. It looks like, because there are many ways that you can reward, loyal party
they think
officials,
it's a democratization of their capital markets because somehow outsiders are invited to take part in this massive giveaway, but it just ends up impoverishing the state government, and Carl has written a book called his latest book is the financial deterioration of the Chinese economy. So he looks at both the public balance. There is no public balance sheet, by the way. The last one they issued was about 3 or 4 years ago. So Carl makes up his own based on what he knows.